Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 3rd terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows it. Each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we're going to go look at the circumstances of the markets, what the bulls and the bears are throwing at us, the buyers and the sellers, and I'm absolutely grateful for your presence here. Now, I'm here to serve you. So feel free, pick up that phone, dial on in 877-927-6648. 4 eyes are better than 2. So I'd appreciate the call. Of course, you can always send me an email, steve@tfn.com, and inside the Tiger's Den, you can always go ahead and ping me, and I'll be happy to get to any of your questions out there as best as I can, especially on this terrific Tuesday. Of course, this is Tiger Financial Network. Again, I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 87 points. She's trading at 17,915. S&P is up about 5 points at 2109. NASDAQ Composite up 20 points at 5148. Russell 2000 up nearly 8 points at 1193. Gold is back $22. Silver's off 19 pennies. Light sweet crude up $1.82. Natural gas up just slightly, leading the charge. The upside out here. Intercept Pharmaceuticals up $11. BoFi Holdings up about 11. Bluebird Bio up about 9. Pioneer Natural Resources up 9 as well. LinkedIn up 7. To the downside, we've got Credit Acceptance Corp. That's off $10. Martin Marietta down about 10. Fidelity National Information Systems off about $9 out there. So we've got Avis Group. That's down about 560. I have already had some requests inside the Tiger's Den. Now, I haven't been able to listen to any of the morning shows, and I don't want to beat a dead horse out here. That's for sure. But I'm sure there's been talk about gold. So maybe I can add some new information. Let's first take a look at the daily chart. So the question of the den may be a good segue into me taking a look at that. So first, let's take a look at what's going on the existing contract, the December contract for gold. Now, both you and I were prepared for this. Am I correct or not? Right? You and I, we have prepared for this. And the reason that we prepared for this is because we just simply were drafting behind what the large commercial traders were providing to you and I, their signals. For those of you not familiar with that, the first signal really came from this chart right here. This is the chart of silver. And this is a chart, everybody takes a look at data differently. As long as we can find patterns that are reliable, that provide us with good probabilities out there, then it doesn't matter how it is that you interpret the data, as long as they can provide you with reliable decision making. In the case of silver, the bottom portion of our chart out here is taking a look at the net position, the net open interest position, the net short position, really, of commercial traders. And that short position as it relates to open interest. And this goes back historically. I've got this going back to 2006, I believe. And as we take a look at the current patterns out here, what we know is that 2 weeks ago, actually it was beyond 2 weeks ago, but 2 weeks ago, the commercial traders hit that upper threshold level. When I say upper threshold level, I'm referring to this red line out here. I'm coming back into July of 2014. Levels where commercial traders were just simply piling in, anticipating and expecting or making it happen. However it worked out, they were looking for silver to move lower. In fact, that's what it did. We saw the same pattern occur back here in January of 2015. We saw the same type of top occur out here in May of 2015. And we saw them rush to the doors out here during the last several weeks. That was the first signal that you were going to see some type of decline inside the metals. my clients and I, we were long mining stocks, but having taken a look at this, we had some stops in place. We got out for some nice profit out there. Now what we're seeing is price move lower. Now, the cool thing is this data is effective as of the close of business on Tuesday. Today is Tuesday. So come Friday, it doesn't get reported till Friday afternoon around 3:30, not even around 3:30, at 3:30, when you can go grab the data. Now, it's a huge spreadsheet. I mean, humongous spreadsheet. So you have to really know what it is that you're looking for and how you're mining for the data. But once you know that, and what we'll be able to see is just how quickly, if at all, the commercial traders, presumed to be the smart money out there, just whether or not they're stepping off of the gas pedal and they're really moving to the downside. Now, I believe they've got a long way to go to the downside if we just take a look at their positions before silver could find a bottom. So let's just stick that feather in our cap. Now, it was silver that was pointing the message of getting up to those threshold levels, just as gold was moving higher with regard to commercial traders, I should say, with regard to their net short position as it relates to open interest. They have not gotten back, interestingly enough, to the levels associated with the highs back here in February of 2015 and August of 2014 out here, but still up to levels high enough, just as took place back in March of 2014. So again, we'll be interested to, so they were giving you and I the signal that these metals were going to move lower. How do they do that? Is it magic? Is it hocus pocus, dominocus? Shoot, no. You thought I was going to say something else. But shoot, no. Of course it's not out there. It's just really using the data, mining through the data that's at our fingertips. Okay, so you and I, we had anticipated that the metals were going to move lower out here. Right? That was broadcast to us weeks ago. Started being broadcast to us weeks ago. Now, let's go take a look at what gold has done out here. And it's not a good scene with regard to where gold is at. And what do I mean by that? Let's go ahead and clean up this chart. Let's add things back one at a time. Give me a moment here. We'll turn some things off. Let's turn that off. Let's turn that off. Let's turn that off. There we go. So first, let's even turn this off. Okay, so here we see that gold, we're taking a look at, today we're going to take a look at, well, you know, as we do each day, we take a look at a number of different patterns that are out here. So today's pattern with regard to a gold that's not good is we can see the rising price channel. And now we see, well, now I don't know how gold is going to close out, right? So at 4 p.m., at the close of today's session here in the electronic market, you know, gold could always move higher. You might be the one that's out there buying. I'm not going to be buying, but that doesn't mean that you shouldn't be. I would say you shouldn't be, but go ahead if you want. At this stage here, unless we see gold get back above that rising price channel, price is now broken through it. And in fact, you won't know if the trend is going to resume until you see price get back into that price channel out here, right? Now that it's below it, any bounces that hit the top of that, which is really the bottom line out there, and if that were to act as resistance, then it's just really a simple counter trend rally in a downward move inside of Goldilocks. So that's the rising price channel that has been broken through. So we can go ahead, we can get rid of that out there. Let's go ahead and add this trend line here. So that was the first trend line that we've seen that's been broken. If I were going to add trend lines, I suppose I could also do this, right? There's the green trend line off the bottom. Again, the difference between using channels and trends, basically we're using the body of the candle. Now, if we take a, so today we've got gold breaking through two trend lines. Of course, this is as of 1:15 p.m. Anything can happen during the day. But if we take a look at that trend line that began back in January of 2015, we use as our next touch point out here the level from May 18th. We can see that that happened to run right into that nice little high on August 24th. So from a trend line perspective, we've got three nice touch points out there. I mean, it's solid. Now, typically, when you break a trend, price comes back to test it to prove that it's broken that trend. Just as it really did back here when it broke through that level on October 6th, we saw it move slightly higher. October 7th, came back, tested it on October 8th, and then on October 9th, it was off to the moon. Well, what's off to the moon mean? You know, you have to take a look at different patterns out there. So I use that as an expression, not that it's not going to come back, because, of course, you know, it's a two-way market out here. So we know that Goldilocks has broken through really three trend lines out here: a channel line, rising channel line, a trend line to the upside, a trend line to the downside. So that is not a good scene. Now let's take a look at just simple retracements out here. Let's go from low to high. Let's just assume that you didn't know anything about what commercial traders are doing. Aha, but you do. We do. But let's assume that you didn't. You might be saying to yourself, well, I'm going to go ahead and buy the 0.618 retracement here. Why? Because at the 0.618 retracement, that's oftentimes where a market will go ahead and, if at a minimum, make a counter trend rally. If not, go ahead and change its position out here. Well, the problem with that today is that gold has hit that 0.618 retracement level with a wide-ranging bar. What do I mean a wide-ranging bar? It's the largest bar to the downside since the high that was put in here on October 15th. That is not the type of bar you want to be buying, because the implication of that bar is that it wants lower price. Now, you put that together with breaking 3 trend lines, take a look at what commercial traders were doing. They don't jump off the accelerator that fast. Their boats are huge. So they can't jump off that fast out here. What does that say? That says at a minimum, gold should be heading to the 1099 level. Now, I'm not talking about the kind of form that the IRS sends you. I'm talking about the price point that is the 0.786 retracement. Now, let's go take a look at our TAS market profiles. What is their signal out here? So we've got 1099. We'll go ahead and leave that retracement up on our screen out here. We'll go ahead and blow this up for you just so you can see it in nice, big, bold numbers and everything. What we know is that today, with that wide-ranging bar and everything else, price broke through the weekly TAS market profile high. That also is another failure on gold being able to hold support. So what we have seen today in the case of gold, maybe this was all covered earlier, and if it was, I apologize for duplicating some of this, but I think it's important for you to understand what gold has done thus far as of 118. What does that say? That says to you and I that 1099 is basically written in stone out here. Why? You've got the weekly point of control. You've got a 0.786 retracement. And the reality is, if price is moving down into that area as it hits the swing point from July 24th with any kind of volume, what you can anticipate is price moving all the way down to or near the bottom of that swing point, which, by the way, is priced out at about 1073. So that's what is going on inside gold, short of anything out here in the market reversing, which we don't see at this stage of the game. Now, that's taking a look at the daily contract. What you and I can also do is let's go take a look at longer term out here, since I was asked the question to take a look at primary trading ranges or horizontal trading ranges, which is really what my screen shows. But Rolfs, he was, we'll call him the godfather of primary trading ranges. Of course, all of his work was done before so many things were automated. I simply was able to get this tool automated. So it's really horizontal trading ranges, because Bud would always carry forward the monthly over to the weekly over to the daily, and then take a look at other intersections on those shorter time frames. I don't do that, because it's automated. I don't want to have to do all that work. I want the system to do it just like that and put those up there and take a look at the bars, take a look at the opens and the closes. So when we get back from this break, and on my screen right now happens to be the monthly horizontal trading range boundary lines. So when we get back, let's go interpret this chart, the larger, longer term chart for Goldilocks. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up about 94, S&P's up about 6 points. And before we went to that break, we were beginning to take a look at the horizontal trading ranges for the long-term charts of gold. Now, what I have up on my screen is the continuous contract. My data feed, as far back as it goes, is really the 2002 timeframe. So these numbers would change, potentially would change a bit if I had gold going back even further. But we'll just simply go with the data that we've got, which is 13 years worth of data. We're looking at the monthly chart out here, and the horizontal trading range is the way that this is automated. So we're just taking a look at the largest number of co-located opens or closes. That means we're really only looking at the body of the candle. We don't care whether it's an open or a close. And on a monthly basis versus a weekly basis, they're always going to be, well, not always, but typically they're going to be different. They're going to be different because the closing session on a week and the opening session of a week is going to be different than a month. Likewise, if I use the daily, it's going to be different. If I use the 120-minute chart, it's going to be different. This helps us understand where price is trading within. The boundary lines is really what it is that we're taking a look at. Now, the largest boundary line, if we take a look at going back to 2002, is at a price point right around 421.70. Now, look, this is not meant to be exact to the penny, so we're going to call it 422. And at 422, at the price point of 422, I don't know why that disappeared off my screen out here. I was going to show, oh, it's probably because I don't have it turned on. Let me go down here and change this. Oh, what did I do there? That's not good. Audit segments, there we go. Whoa, I didn't want to turn that on. PTR counts. There we go. Okay. Now, if we take a look at gold, there were 24 times since the 2002 time frame where gold closed on a monthly basis, closed or open right around that 422 level. Then the next largest price point area that we have inside gold, again, this is a monthly chart that we're looking at, is right around the 670 level. Once you've got those first two levels established, it could have been to the downside. In this case here, it was to the upside. Then all we have to do is just simply add that price equidistant to those levels. So these levels are identified far in advance. Now, what's interesting is those two levels really establish those horizontal trading range boundary lines. You can see what's interesting if you keep adding those quadrants, we'll call it a quadrant, those levels, those floors, to each new level. What's interesting is when gold made its way up into the 1900 area, when it found resistance, where did it find resistance at? Which was developed all the way back here in the between 2007 and 2002 timeframe. That's right at that horizontal trading range. Now, here's what you and I know about gold right now. And this is over the past 5 months out here. We can see that price has broken back down below a horizontal trading range of 1165. 1165 is a very key area. We can see that since the time frame here of July of this year, gold has been below. It's tried to get back up and test that level, and it's failed. Now, what I have here are the monthly horizontal trading range levels. What we can also do is we can take a look at what that midpoint would look like. So we can go ahead and split the difference, because oftentimes that can become an area of support or resistance. Doesn't have to, but it is worthwhile knowing those midpoints. You can see how they act as support or resistance. So to the downside here, let's assume that commercial traders really knew what they were talking about because they put their money where their mouth was. That says that the gold here, if it doesn't hold those areas that we took a look at, gold's likely to get down to about the 1041 level. At 1041, that happens to be your midpoint in between this next range that we are in. If, in fact, gold doesn't move higher from here and it gets below 1041, then you should anticipate a move down to the 917 level. Now, this is kind of interesting as well. If we take a look at the down channel that gold has been in since the highs out here, those are the yellow lines that are on my screen out here, you can see that we have a nice level here with inside gold from a longer term basis to really be able to anticipate, look, if gold is able to break above 1165, close above 1165 on a monthly basis, it will have broken through a long-term price channel. Remember when we were looking at the current contract here in December, we didn't go back that far. We certainly didn't get back to the 2012 timeframe, such as this chart does. So 1165 is a very key area inside of gold out here as we take a look at it. So hopefully that gives you a better overview and perspective. Now, with regard to what gold is going to do. Now, the question and what was the segue into this was, could I take a look at these horizontal trading ranges as it relates to currency pairs? And one of the currency pairs was asked about. Let's go take a look at it. Is your friend and mine. That is the euro, Japanese yen. Now, here is the monthly chart for the euro Japanese yen. We can see that it is right now down to support. 132.81 is the level that is basically one of its primary horizontal trading range levels. 23 occurrences, the largest number of occurrences, and this takes us back into 1990. Where does this take it to? 1994. So we get back from this break. Let's go take a look at this currency pair as well. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 100 points inside the den. One of our denners used the word bubbled. I remember in my senior year of high school, can you believe this? My senior year of high school, I was transferred. My dad took a job in Milwaukee, Wisconsin. And for personal reasons, family reasons, during the middle of my senior year of high school, I was sort of forced to go to Milwaukee. And I moved from a very, we'll call it lower middle class, to an extremely upper middle class. The high school is called Nicolay High School, just north of Whitefish Bay. Really, I don't think it was in the Milwaukee City district, but it was just a mile off of Lake Michigan. But the interesting thing, I do remember I remember somebody asking me if I knew where the bubbler was. And I was kind of like, what? The bubbler. That's what they actually call the drinking fountain. I don't know if they use drinking fountains in high schools these days out here. But anyways, I was just reminded by that word bubble. So in any event, that was, I don't know how I got sidetracked there, but I did get sidetracked. Let's come back and take a look at the Euro-Japanese yen. And we do want to take a look at the Euro-Japanese yen because it's the carry trade inside of the currency pair for our markets out here. And as we take a look at it, you can see that where it's trading right now is 132.73 and at 132.81. Remember, we're not really trying to be exact with this. We're just using this as a really good range. But at this level, we've seen on a monthly basis, and this is not the end of a month, but we have seen at this level here, this has been the largest congestion area, which takes us back into the 1994 timeframe, October of 1994, where the Euro-Japanese yen has rested. So this is really an important level of support for the Euro-Japanese yen. If the market is going to take off to the moon, and we go take a look at what that actually looks like here, what the bulls need is they need this currency pair to find its footings like now, like right now. Because if it doesn't find its footing, somebody's going to get the memo and realize that there was a delay in the mail. And I would say that it's going to be the stock market that will get that memo, because it's the currency pair that rules the stock market out here. And this has actually been going in the southerly direction, while the stock market has been going in the northerly direction out here. If, in fact, the Euro-Japanese yen fails at this level here, it's likely to make its way down to about the 123.84. Now, I did mention that we can take a look at the midpoints of these horizontal trading ranges. So that really says the 128.32 level could be its next stop out there. And if we take a look at the daily chart, if we go all the way back here and take a look at the daily chart for the Euro-Japanese yen, not the monthly like I have up here, let's go take a look at the daily chart. What this shows us here is that this is really on from a daily basis. It needs to hold this level of support, its last swing point out here, which it's tested and it has held. Whoops, when it's tested and it's held right there at about that 132.23 level. So if we see a move below that, that actually sets on a daily basis. Price can move all the way back to the 126 area, which I think coincides with the levels that we were looking at inside the monthly chart out here. So for this market to really cruise higher, this currency pair needs to find its footing right here. That doesn't mean at 137. It means over the course of the next couple of days out here. Now, one of our listeners out here that is apparently a motorcycle rider, so that's cool, has asked if I would take a look at Valiant Pharmaceuticals, VRX. They are short Valiant Pharmaceuticals. So as we take a look at this, what we know about this chart on a daily basis, and let's not worry about the reason why this thing moved lower out here, whether or not they're accounting, whether or not, they're using a proper accounting method, a general accepted accounting, or whether they're using, I don't know, the firm of Dewey, Hookham and Howe. I don't know. But what we do know is we've got a high volume low out here, and that price point is 88.50. We know that price is right now up against support. It's daily market profile. The daily market profile on this is 97.63. So from a short perspective, what you don't want to see is you don't want to see price get above 134.17. I don't know where this listener is short, but getting above 134.17, it'd be the first time that we've seen a close above a daily market profile since back here on September 17th. So you don't really want to see that. What you do want to see is you want to see a close below 97.63. Then what you're going to be dealing with is the price point out here of the low from October 21st. Now, if it gets down and it tests 88.50, and it likely won't have the volume. The volume down there is 88 million shares. If it does have volume as it's moving through there, then that's a real problem. But if it doesn't and it tests that level and it holds, you're probably in some kind of trading range. And that trading range from the lows to probably that 134.17 level. If we look at a monthly chart on this and we take a look at Valiant Pharmaceuticals, nothing could actually look uglier than this. And it's really below any kind of support out here. If we just go back to the lows of August in 2014 at 106 even Steven, as long as price stays below that, this thing has the potential of moving all the way back down into who knows where. This thing could go to $10. You're at 97. There's really no significant level area of support or breakout on a monthly basis that would tell us anything more. So I think that the best thing for us to do is let's just use the normal common sense, either weekly. You can take a look at the swing point from a weekly standpoint. Again, that's that test of 88.50. You got 197 million shares there. Any test of that low and holding it says you could be in some type of consolidation down at the bottom. So that is ticker symbol VRX. What was the other request that we had? Oh, the IBB. Now, the IBB, I think the question was to go take a look at our horizontal trading ranges. So let's go look at the IBB. Let's go see what we can figure out here. Now, in the case of the IBB, I'll leave the monthlies up on my chart. You see, when we take a look at horizontal trading ranges, such as we have here, when you're dealing with what basically is a vertical move to the upside, you never have the opportunity to build any floors. So this tool, in taking a look and utilizing the monthly time frames, is basically irrelevant. Is irrelevant a word out there? If it's not, we should make it a word because I like to use it. I don't use it too often, but I use it often enough that I think every now and then somebody might send me a email that says it's, I don't know if that's the word that's not a word or it's something else that I use. In any event, basically, we can't use the monthly time frame on this. So the good thing is that this tool here allows me to switch from monthly to weekly, but weekly's not going to work. I'll go ahead and show you what the weekly, right? Because we just simply, irrelevant is a word. That's perfect. It must be something else that I use out here. But you can see that the weekly, and I'm going to use this with conviction, is also irrelevant. Oh, irregardless. Yeah. So it must be Peak that sends me those emails out there. But if we take a look at the weekly chart, it's irrelevant with regard to its market profiles. However, what you and I can then do is go down to the next time frame. That would be the daily chart. And we take a look at the daily chart. Here we have more relevance. Now, we're looking at monthly candles on a daily chart with regard to its horizontal trading ranges. That's okay. It just keeps things relatively clean. But look, I could switch over here. We could switch to the daily time frames. Then we'll see those same profiles in place. And what this says to you and I is that the IBB, we can go ahead and put in our midpoints out here for the daily. They'll be the little dashed lines out here as soon as I put them in. There's our little midpoints out there. So you can see that the IBB right now is up against a level of support, the 340.42 area. And if in fact it can clear this level, then price is likely to go ahead and move up to the 355 and change area, its next level of resistance out there. So that takes care of the IBB, taking a look at the daily. So it's a great tool that I use here. By the way, if you are an e-signal user and you'd like to have access to the tool, the guys that developed it for me was one of the original programmers that developed so many of the tools for e-signal. Then he went off on his own to do some things. Jason Keck is his name, and you can get this tool. Traders Formula Co-op is where you would go search for it on the den. It's not an expensive tool, but it's very valuable, and you can use it for intraday time periods as well out here. I believe there was a question to go take a look at the NDX. So as we take a look at the NDX, here we've got both weekly and monthly horizontal trading ranges. See, the green lines here are the weekly. Remember, weekly are going to have different closing candles than monthly, and that's why you're seeing a slight difference. So what we know about the NDX 100 so far is we know that it is trading right at a horizontal trading range boundary line on the weekly basis. The number is 4704. We're trading at 4725. What it looks like to me that the NDX wants to do is get up and at least tag the high, the 2000 high out here from March 2000. And that's at about the 4816 level. And if it can tag that, it actually could have the energy to get up to that midpoint of the next monthly horizontal trading range boundary line. That is 4941. Any close below 4704 on a monthly basis, and we're just into the month right now, we can see that so far those levels have held as resistance out here. And it may this time as well. The first test was back in July. The next test was last month. Of course, we had a nice wide-ranging bar coming up into that. But if that level, if we see the price move back below here during the month, that may be providing you and I with an important signal. What's that signal out here? Well, that signal says that price could get back to the 44.58 level. That also says that price could get down to testing that horizontal trading range, not horizontal, the diagonal price channel that was out there. Now, this is the interesting thing, and I shared this with subscribers earlier this morning because, it's always incumbent upon us to try to figure out what the markets are doing. That's what I do with you each and every day. And certainly I do that in detail for clients and subscribers out here. And what is interesting to me is that as the market was moving lower, the New York Stock Exchange, the Dow, both you and I know that price was moving right into the March 2009 level of support. And at the same time that it was doing that, what the NDX was doing was testing the top of its Also, it's a trend line, but it was the upper channel line that it was testing. Look at how price came back here in August. Look at how price moved off of that on that September 29th level out here. And in fact, what you and I can do, just as horizontal trading ranges have multiple tiers out here, well, so do channel lines. So we can add the next channel line. And the interesting thing is, if we take a look at the next channel line, equidistant to the primary channel that was drawn out there, look at where price has also found resistance. So now what you and I know with regard to the NDX 100, which is motoring this market higher, it's actually right now running into, and I don't mean necessarily 146 in the afternoon, but I mean basically right around now, price is running into a significant level of resistance, both diagonal and horizontal. Maybe it's got a bit higher to go from a diagonal standpoint, but maybe it doesn't have much higher to go out there. So the key to be watching, in my opinion, inside the NDX 100 is going to be, can it bust through this area? Can it get up to 48.16, or does it fail and it gets back below that 4,700 level? It's weekly. That's that green line that's on my chart out here. That's the weekly number. I might have said monthly, and it's the weekly number. So at this week here, we see a close below 47.04. We're going to have a third week of a failure up at a resistance level. Where can price fall back to? I think that's where I said the 44.58 level would be the number out there. So I think that covers all of the questions inside of the den, inside of email, except for I see there's another one that has come in from somebody asking for a SPY entry point out here. And if we take a look at the SPY, and the question is, can you provide an entry point for the SPY for a long-term trade? Well, long-term trade says, hey, we ought to go take a look at what is going on inside the SPX, right? We ought to use the same exact tool out here and try to find some areas of support and or resistance. So what is it that the SPY or the S&P 500 really is doing out here? Let's take a look at it. We can see that just like we looked at the NDX 100, we can see that price is basically right now trading just slightly above its diagonal trading range, right? It's diagonal price channel that is out there. I would say that your entry into the S&P 500 would be long-term entry point would be based upon two things. The NDX 100 taking out that high, because we can see that that is really up against resistance, and in combination with the S&P 500 closing above 2134. 2134 happens to be the midpoint of its monthly horizontal trading ranges out here. And maybe it's, again, you can't be exact on this, but you would see a clear break. And if you see that, then price is likely to run up to the 2244 area. So that's about a 90-point move. So I would wait, you're at 2111, I would wait for another 25 points to get confirmation before you would go ahead and take that position all the way up to 2244. But I think that it'll more likely be the NDX 100 that becomes the driver. So you'd want to really be taking a look at the NDX 100 at the same time simultaneously. Hopefully you would see the S&P 500 also go move up. Then let's assume that the NDX 100 finds resistance out here. Then it's going to be based upon the pullback. And where could that pullback take it to? Well, inside the S&P 500, the level, you're at 2111 right now. 1992 might be, between 1992 and 2016, not the years, but the price levels, might be the areas for you to take a look at. Now, at 2016, that is basically, you've got about 90 some odd points to the downside. So if you're looking for an entry price or price in the S&P 500, it's either got to be a breakout or you've got to be willing to buy the next dip at 2016. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow 107, S&P's up 7 points. Had a request to take a look at light sweet crude. Let's go ahead and rip that apart here. Let's take a look at the daily first. One of the things that we pointed out last week was that light sweet crude ran right into a support. I mean, right to the almost to the nickel, but not to it exactly. On October 27th, we saw the price get down to 42.58, closed at 43.20, and the bottom of its TAS market profile on a weekly basis was 42.76. Hit that nicely, held that support. We saw a nice wide-ranging bar moving off that in the very next trading session. What we can see here is the consolidation zone, in essence, that light sweet crude, black gold, Texas T is trading within, and that says that we're likely to see a move up into the 49.84 level, and that is the weekly market profile high. It could extend beyond that. It could go test the high of October 9th, which is 51.42. That's the current contract. If we go take a look at the continuous contract for gold, my data taking us back to the And one time frame out here, what we can see, just turning on the weekly, daily, and the monthly horizontal trading ranges out here. Well, number one, what we see is we see on a monthly basis two nice hammer candles. One that began in February of 2009. There's your first hammer candle, and then that took us down basically to our horizontal trading range of 41.38. Price was lower than that. It actually got down to 33.55. We see another hammer candle that formed right here in August of 2015. So the market clearly hammering out these lows in this price area. These are important lows and likely not to be broken. We can see the price here is trading within the horizontal trading range levels of 41 and change, all the way up to the $60 area, and that is likely what we will be watching inside of light sweet crude. If it can break above 60, close above $63 to be specific, then you'd be looking at a run up to the 78 area. But right now we just have this little horizontal trading range inside of light sweet crude. So if we go take a look at what is it that we haven't covered today, probably a lot. That means we've left a lot for our man Polar, David White, to cover for you. And of course, on Terrific Tuesday, you've got Tom O'Brien after that, and then you've got Andy Heck from 5 to 6. Let's take a look at a couple of these stocks here, individual stocks, and see what they're doing. Let's take a look at Pioneer Natural Resources. That's up 7%. Why are they up? Looks like they did have earnings report out here, and this thing has gapped up. It's done it with nice volume today, 2.5 million shares, taking out a B point of an A to B equals C to the upside that only had 2.2 million shares. So on a conservative basis, if I put my tool in place out here, if we take a look at the conservative A to B equals CD pattern, would start down here right around the September 28th time frame. The B point would be October 16th, and the C point would be down here on October 27th. Pioneer Natural Resources, on the conservative basis, should head to 153.12, then 159.61. And I don't think I'd do anything more than the conservative A to B equals CD. More likely than not, 159.61 is going to be the area for Pioneer Natural Resources, PXD, to make a move. To the downside, let's take a look at what used to be, I believe, GMAC, Credit Acceptance Corp of Michigan. That thing is down. It's been down a couple of days here recently with volume on the trading session of October 31st. It is now testing its swing point low. Let's go take a look at the volume. The swing point low that we're referring to is from the trading session of August 24th. No surprise there. That had volume of 276,000 shares. It's being tested with volume. You've already done 220,000 shares today. Now, that says that CACC should get down and test that level at least one more time. That is 178.79. Folks, thanks so much for being here. Have a terrific Tuesday. I'll look forward to seeing you again on wonderful Wednesday. Stay tuned, because our man David White's going to have a terrific show. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.